Have you ever considered how deeply global energy markets relying on a tiny stretch of water, and what happens when those pathways are few and far between? It is a question that affects everything from your daily commute to international relations, highlighting how interconnected our world truly is. The energy security implications of limited valuable routes through the Strait of Hormuz are profoundly significant, primarily by concentrating global oil and liquefied natural gas supply vulnerability and greatly increasing market volatility in times of regional tension. This narrow waterway acts as an indispensable choke point through which a substantial portion of the world's energy resources must pass. The core reason for this heightened risk lies in the strait's unique geography and the sheer volume of hydrocarbons it handles. Roughly 20% of the world's total petroleum liquids consumption and about 1/4 of global liquefied natural gas exports transit this waterway daily. Its strategic location at the entrance to the Persian Gulf means that any disruption, whether from political instability, military conflict, or even accidental blockages, can immediately send shockwaves across global energy markets, leading to price spikes and supply anxieties. The absence of sufficient alternative pipelines or shipping routes amplifies this fragility, making the world highly dependent on the single passage. For nations and energy companies, understanding these implications means actively seeking diversification and contingency plans. This involves investing in alternative energy sources, developing strategic petroleum reserves, and exploring long-term infrastructure projects like pipelines that bypass the strait entirely. While some existing pipelines offer limited bypass capacity, such as Saudi Arabia's East-West pipeline from Abqaiq to Yanbu, or the United Arab Emirates Habshan-Fujairah pipeline, they cannot fully replicate Hormuz's massive throughput, leaving a significant vulnerability. Moreover, the political complexities and immense costs associated with building and securing new, high-capacity routes mean that quick fixes are simply not feasible. It is important to recognize the term transit risk when discussing the Strait of Hormuz. This refers to the potential for disruption to shipping due to political, military, or environmental factors. Major oil producers bordering the Persian Gulf, including Saudi Arabia, Iran, the United Arab Emirates, Kuwait, and Iraq, are fundamentally reliant on the strait for their export revenues. This mutual dependence creates a delicate balance of power, as any party attempting to disrupt the flow of energy would also severely impact its own economic stability. This intricate web of interdependence shapes both regional diplomacy and international energy policy. Ultimately, the limited alternative routes to the Strait of Hormuz mean that global energy security remains intrinsically linked to the stability of the Persian Gulf. Recognizing this vulnerability compels international stakeholders to prioritize diplomatic efforts, foster regional stability, and continually assess potential mitigation strategies. This proactive approach helps to ensure a more resilient global energy supply, benefiting everyone.